Hey there, my name's Curtis Lucas, and you're watching Empire Building. So, it finally happened. Bitcoin's correction over the weekend brought it from nearly $42,000 all the way down to $30,000 before bouncing back up to about $35,000 where it was when I started recording this video. Now, I'd love to sit here and pat myself on the back, but what we saw from the blockchain stocks this morning and throughout the day signaled something quite interesting. While we might consider the sell-off during the pre-market hours to be somewhat significant, clearly investors had a much greater appetite than I was expecting. And this actually reinforces the concept of buy and hold. If you chose to simply hold through this, and should you have chosen to do so, still had the opportunity to sell at a higher price than I sold when Bitcoin touched $40,000. And this is the murky waters of trading. It's one of the reasons why I definitely don't like it. And what this experience has certainly taught me is that this will probably be the one and only time I attempt this. The good news is the trade that I made on Thursday did settle, so now I'm able to transfer those funds into the new tax-free savings account and begin trading options. So all things considered, this was still the optimum time to do this for me. But having said that, I still have not purchased a single share. I'm certainly not going to be rolling all in tomorrow again like I did last time. So now I need to carefully and strategically position myself throughout the blockchain stocks. Warren Buffett has been quoted as saying that the stock market is a device for transferring money from the impatient to the patient. Now, while I am a firm believer that if you're too patient in this market, you're bound to get left behind. However, as I mentioned before, during the 2017 Bitcoin bull run, when Bitcoin finally confirmed the breakout over its previous all-time high, by the time it finally did have its first correction, it took over a month for that correction to bottom out. So it's been my experience when corrections like this do occur, it does take time for those scales to balance. It's kind of like setting off a pendulum. The market will most likely swing this way and that way until some form of equilibrium is found. And this is very good because it gives us multiple opportunities to accumulate more. I know everyone's anxious for things to just start ripping again, and that is also a distinctive possibility. But that will only lead to yet an even further and more violent correction. So as I mentioned before, the next phase of this bull run, I'm going to be taking a very different strategy than I did during this first phase. I'm going to be employing option strategies and contracts to improve the overall performance of my portfolio. But I'm not quite ready to do that just yet. In this new strategy, my approach will be to first acquire 60 to 65% of my total portfolio in securities. I am still not ready to divest this into any other sector except for blockchain. That is very high risk. Another 20% of my portfolio will be reserved for options contracts. And the last 15%, at least for the time being, I intend to hold as cash. I expect it will take 2 to 3 weeks for me to fully deploy this new strategy, waiting for strategic entry prices. Mara right now seems to be one of the favored companies coming into this correction. So obviously I am a little hesitant to purchase it at essentially the same price I exited. However, that might end up proving to be the best opportunity I'm going to get. But I am willing to wait it out and take things slowly. But I will say this, now that I've been able to transfer those funds from this point on, my strategy will be the buy and hold. And I do have some of the viewers to thank for this because some of the comments pointed out that there are option strategies that allow you to protect yourself from downside risk without actually having to sell your shares. You can create your own options contracts and sell them on the open market covered with securities that you already own and profit from that so long as the price doesn't continue to increase. I know this sounds a little confusing, and it was for me at first too, but essentially what an options contract is an insurance contract, and they're generated by anyone who actually holds that security. So if I own 10,000 shares of Mara, that gives me the ability to generate a contract and sell that on the market. As an example, if at $27 I thought that the stock was getting overbought, And I thought that it became more and more likely that the stock would not reach a price of $30 before falling. I could select $30 as a strike price and sell covered calls on the options market. Whoever buys those contracts, the premiums for them would come to me. Now, I would also have to select an expiry date for these contracts, and this is where things get a lot more complicated. I would have to select the end of any given trading week. So last week, if I thought that we were very close to the end, I might pick the very next week, which would be this coming Friday. In selling those contracts, I instantly receive income. But should the price continue to rise and exceed $30, that would give the holder of those contracts the right, but not the obligation, to purchase my shares for $30, even though they may be trading higher than that. I would have to either buy those contracts back at a higher price, taking a small loss, but in the process, I still own those 10,000 shares, which are now worth more. So I wouldn't have benefited as much from the rise in price, but should the opposite happen and the price does indeed crash, as it did, and never did rise back up to $30 by this Friday, then the premiums that I collected from the sale of those contracts, I would keep. This is one extremely powerful strategy that could very easily protect us in this market. And this is only one example of what you can do with options. I know that I've barely scratched the surface on this, and I know that there are plenty of other viewers watching this video who are far more experienced. I'm sure many of them will comment down below, and I highly recommend you check those out. And also, do your own research if this is something you are intending to employ yourself. I know I will. Like I said, I have barely scratched the surface, and I am a complete newbie at this. But I do recognize that options can be a very powerful tool if used the right way. But if abused, it can be a very fast way to lose a lot of money. When abused, it is the definition of timing the market. Because not only do you have to predict a price, but you also have to predict a timeline in which that will happen. But stay tuned, because I am going to do far greater deep dives into this as I start to employ this strategy. In the meantime, as I said, I need to start looking for opportunities and entry points for each of the companies that I want to carry in my portfolio for the rest of this bull market. If you have any ideas, let me know down below in the comments. That's all for this one. Now let's get back to empire building. Bye.